Hey guys, hope you are all doing well on this bearish day. There is no gentle way to go around this. We got hammered hard today, the entire market did. We had more bad news pointing to further uncertainty, and Wall Street is very confused as to how to react. We are going to talk about all of this today, give you some pointers into what is happening, some very big developments as to Evergrande, and quickly recap how we traded. I want to take a quick moment to thank everybody that watched my morning video. Today we wrapped up this small series and I am super content and pleased with the overall reaction I received. I will link the video down below in the comments for you as well. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. We are in the middle of a huge storm that has the compass of our economy and all its participants spinning around. Things are not normal, and I have been warning you that we were going to be entering a period where markets were going to be red, where pullbacks on all stocks would happen, and where nobody was going to be able to precisely explain why this chaos has erupted. No, I am not talking about the market crash, because this is not a market crash and I doubt this will result in a market crash. That still doesn't mean this tumbling will not have great effects on investments and on the overall health of the economy. Berkshire Hathaway's Charlie Munger is saying the markets are crazier than they were in the dot-com boom. He specified that many American companies have been trading 35 times earnings, making it tough for the average investor to get a foothold, especially with valuations the most extreme he has seen in recent history. Though Munger is notorious for bashing cryptocurrencies, saying many times they should have never been invented, his understanding and experience can be rivaled by less people than I have fingers on my hand. He is very astute and smart, and when he says things are crazy, you have to stop and really take a look at what is happening, because something is amiss. Omicron is here, and it's adding a lot of fuel to a huge fire. I want to explain the relationship between this variant and Wall Street. Omicron could be disastrous for the global economy, potentially disrupting the lives of everyone on the planet, or it could represent a worry, but a minor one at that, and that's precisely what is making its existence so much worse than it should be at this moment. Nobody really knows how it's going to affect us or the magnitude of its effect, and with such uncertainty, the stock and the bond market are swinging like a weather vane before the storm, blowing one way and the next day the other. It's honestly a full betting game right now when you make any predictions, because your call could be just as right as it could be wrong. But again, Omicron is just fuel to a fire that was already in place, ready to shake the markets out of their comfort zones. The real reason culprit of all this chaos is the Fed, and their marvelous consistent inability to keep currency sound. Their task is to ensure stable prices in a sound currency, and I don't think there is a living person right now that can argue that the Fed has done a reasonably good job tackling both of its main duties. Inflation has now exceeded 6%, the highest in 30 years. Fed Chairman Jerome Powell insisted it was transitory, but what he did not tell us was that his definition of transitory meant years with no end in sight. Inflation is a threat, a very serious and real threat to you, your family, your neighbors and friends. Inflation is wiping out nominal wage gains for workers across the country at an alarming rate. If you adjust inflation, weekly earnings are down 1.6% compared to a year ago, and the worst part of this is that there is no guarantee, no mathematical probability or ceiling that ensures inflation will not keep on climbing. America added a disappointing 210,000 jobs for the month of November, which is alarming to say the least. This number fall far below expectations, to the point even the Bureau of Labor Statistics even admitted was bad. Economists expected more than double this figure, but now have to go back to the charts and board to see where this leaves to our supposed economic recovery. Furthermore, business services, transportation, warehousing, construction and manufacturing saw the most jobs added by comparison, but the retail sector saw a loss. Needless to say, we live in a country where we need to spend, and the holidays are here, and nobody wants to work at retail. This will have an effect on sales for businesses, which will in turn have a directly negative effect on the economy as a whole, as worried analysts and economists as banks like Goldman Sachs are now saying. The Fed is not only failing at their job, but they are failing to such a degree that you have to wonder if they are purposely manufacturing an economic reset. Even the bond markets are not following their lead anymore to higher interest rates. Now, the International Monetary Fund is saying the Fed has to tighten their policy at a faster rate in light of new worries that inflation numbers might be rising again soon. And it's not only the IMF saying this, the St. Louis Federal Reserve Bank's James Bullard called for the Fed to begin tightening monetary policy as well today, citing unexpectedly high inflation. The Fed, led by Powell, has forced millions of Americans to choose between paying mortgages, feeding their families, filling up gas tanks, heat their homes, or buy Christmas gifts. This is the cost, the consequences of saving Wall Street from bad economic turmoil last year. This is what we get when we have officials worried about Wall Street executives missing out on bonuses. Now, the Dow has shed over 2,000 points over the past month, with even blue-chip stocks and major indexes stumbling down. And so now that we understand the causes, let's go back and look at the prospect of what awaits us investors for GME and AMC. Omicron will 100% affect growth in stocks for the new few months, and not just meme stocks, I am talking the entire market sector of the global economy. This new variant is already triggering fresh restrictions around the world, presenting new obstacles and challenges for both the public and private sector. Overseas travel was starting to bounce back from last year, and now they are presented with new restrictions. Scientists are doing their best trying to gauge how effective are current vaccines, and if new ones need to be created, that will take months of research and development plus extra time while mass production of possible vaccine takes place to make and distribute. I get hated a lot for not being positive, but I don't care about the needs of the fragile few for constant affirmation on their investments. We are in bad uncharted territory that could erase some of the gains of the stock market, including GameStop and AMC, for the next couple of weeks to a couple of months. So buckle up, because this ride is about to get crazy, like Charlie Munger said. Last thing we need to discuss is Evergrande. Evergrande has officially admitted that they will not guarantee bondholders payments. They are saying the quiet parts that we have speculated for months out loud. They released a document saying in light of the current liquidity crisis they are experiencing, there is no guarantee that they will have sufficient funds to continue to perform and make good on their financial obligations. As if today, Evergrande has received a demand to perform its obligations to guarantee approximately $260 million, but they are no longer confident they will be able to do so. This comes in direct light with the fact that the big media has been telling us they have making payments and staying afloat, and it is obvious now that they have defaulted on some payments. How easy it is for the hedge fund-owned big giant media to lie to us so nonchalantly. They should honestly be sued for this. Right now, Evergrande is being investigated and going through legal steps to see what haven't they paid. Evergrande needs two things to happen honestly, and that is they need to restructure their debt in the help of the Chinese government. There is no way around this if they are to persevere through this sinkhole. We know their government is already working with them behind closed doors. What is going to be hard is for them to restructure their debt. As a result of all this disclosure that they won't be able to guarantee it has sufficient funds to meet its debt requirements, Evergrande has been summoned by Chinese government officials. At a press conference, the People Banks of China lambasted Evergrande for poor management, adding that their woes would not impact market stability, which is a huge lie, as I am about to explain. I said that if Evergrande falls, the Chinese real estate market is going to get crushed, and I stand by that. Even if it doesn't result in a huge market crash, it will still get pummeled. Analysts at Goldman Sachs agree with me, recently stating that the real worrisome aspect of all of this is the surging local government debts. The default problems of the world's most indebted company pale in comparison to the $8.2 trillion worth of local government financing vehicles outstanding. Evergrande is a small domino that when it falls, it will hit the bigger domino piece. Even if the larger domino piece doesn't fall, it will tilt, and this impact will be worth trillions of dollars. Nothing is looking good for the Chinese real estate, their government, their public appeal for foreign investors like BlackRock, JP Morgan or UBS. China is looking like a huge ticking bomb ready to go off at any time, and everyone is trying to cut ties and manage their risk exposure because once we hear the news, it will already be too late. Again, China's economy has a very big effect on ours, and as such, given everything that has come to light, our stock market outlook is grim. Expect volatility, expect uncertainty, expect huge pullbacks that will have you scratching your heads, expect double-digit losses on some red days for GameStop and AMC, expect inflation to rise, expect the absolute worst. I still do not think this will result in a whole market crash, but there is a possibility that if things keep on going the way they are with no bounce back, we could have a serious fall like we did on March of last year. Stay zen, because it is the only thing that will keep you on your feet, and get comfortable with the prospect of being uncomfortable for months on end. Everyone is at a loss. Crypto investors, stock investors, Wall Street, everyone. Hold and don't paper hand now, Take advantage of this weakness and try to make the best out of it. Let's now talk about today. The Fed submitted over $1.475 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 60% of the total volume today, while dark pool trades for GameStop accounted for 37% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 4% for the day. AMC began trading pretty neutral during the pre-market. It was only once the markets opened that AMC would start breaking support. It went from 31 to 28 in the span of 30 minutes. It would continue falling, reaching 27.20 before it would slightly bounce up and consolidate between 27.50 and 28. After a while, AMC would retest support at 27, and a bad market would ensure it broke it, taking it down all the way to 25.31. AMC would bounce up strong though, closing at 29.01, above the VWAP but not above 30.01. As for what to expect next week, as usual, I will make a video on Sunday talking about it. GameStop traded bearishly, losing over 5% for the day. It opened to a dip that took it from 184 to 169.50. It would maintain this support for a while, but after many attempts, GME would fall back down to 159.05 before bouncing back up. GameStop closed at 172.39, above the VWAP. It is crazy how easy all the gains GameStop made were erased. Goes to show that without slow upward consolidation, these runs mean nothing. As for what to expect next week, like I said, I will make a video on Sunday talking about it. And that is all I have for you guys today. Thank you all for being here with me, and thank you to all who watched my morning video series this week. I will link today's segment in a pinned comment below. Let me know if you have any fun plans for this weekend or if you are just going to stay home and chill. Let me know what you thought of the video down in the comments below as well. I will link today's morning video down in the comments as well for all to watch if you missed it. Remember to watch the morning video if you missed it. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, have fun this weekend and to the moon.